Gaurav, let's talk about the SBI ESG PMS now. This whole debate around whether or not ESG criteria are relevant in terms of making investment decisions, that debate is growing louder. Where do you stand in terms of what is the importance or relevance of ESG, and what is the future really?
I mean, if you look around, most of the changes that we see today, electrification in vehicles, energy transition, renewables, I think everything is towards a cleaner environment, right? So to that extent, ESG, if anything, as a theme is growing stronger. But I think one important distinction that we need to make here is that ESG is not just E. It's not just about environment. ESG also talks about social consciousness. It also talks about good governance. And when you're investing in companies, in stocks for the long run, obviously you want those companies to follow the right governance practices, to be very conscious about all stakeholders, whether it's employees, whether it's shareholders, creditors, and so on. And to that extent, in our minds, there is no debate that if you were to create long-term sustainable wealth, then you have to focus on companies which are conscious around these ESG aspects. And in any case, when you look at our portfolio, our portfolio is not so much skewed towards a particular theme. We are not so much playing green energy and energy transition and those themes because they are on the right side of ESG. The way we approach ESG is to follow an exclusionary strategy wherein we remove non-ESG companies and sectors from our coverage, and everything else for us is investable. And again, if you think of the fact that we are investing heavily in, or at least there's a skew towards mid and small cap companies, we think ESG is like a layer of sustainability. If you're doing the right practices on governance, on treating your stakeholders fairly, on being environmentally conscious, you're creating a sustainability to your business model. Now, that layer of sustainability, when you marry it with mid and small caps, where the potential for high returns is high, but the potential for mishaps and accidents is also high, then this, I think, combination gives you a good marriage where you can still hope for non-linear returns, but also end up avoiding accidents that come from unsustainable businesses. So I think to us, sustainable investing is the only way we know investing, and to that extent, ESG is very mainstream to the way we invest.
All right. SBI also offers the ESG mutual fund, right? Therefore, what is the criteria for somebody to invest in the PMS? How does it differ really? And is it true that to a great extent, ESG criteria would actually bring down the volatility of a portfolio?
Right. So I think on the first part, SBI has been pioneer on the ESG side. So we were amongst the first ESG funds on the PMS side. We are amongst the first ESG funds on the mutual fund side. But I think the difference between a mutual fund and a PMS, even on the ESG side, is exactly the same as it is for any other diversified fund, which is that the PMS is a much smaller size portfolio versus the mutual fund. That allows you to be significantly more flexible in terms of your market cap choices. So you can actually go down to smaller companies and buy 3, 4, 5% in your portfolio in those companies. So to that extent, it's very different from mutual fund, which tends to be, because of the size constraints, more focused towards larger caps. So I think that's very fundamental to the way we manage this portfolio versus the mutual fund. I think the second difference is also about concentration. Again, to the extent that you're running lower AUMs in a PMS, it allows you to be very bottom up and buy those 20-25 best businesses at any point in time, which lends itself to more concentration versus a mutual fund. And a similar aspect is that you again tend to be very agnostic towards what's there in the index. So to the extent that you're running a market cap agnostic, sector agnostic, concentrated bottom up strategy, you can run very high active coverages, right? So you can, for example, have portfolios which have very little overlap versus the index because you're so bottom up in nature. So I think those are some differences which in general differentiate a PMS from a mutual fund, and the ESG PMS versus ESG mutual fund is no different. To your second question on on lower drawdowns or lower volatility, I think, as I explained earlier, right, for us, ESG is essentially putting that layer of sustainability, avoiding accidents to the extent possible. And as you do that, you inherently sort of lower the volatility of the portfolio. I mean, if you look at the fundamental attributes of a portfolio in terms of expected growth or debt equity or return on equity, they even look much better than the Nifty. And which again means that, whenever there are big drawdowns in the market, these portfolios, these companies, because of that quality aspect, tend to fall lower than the overall market. So I would agree that ESG, at least the way we run it, should lower drawdowns for investors.